Hello, this is Pablo Lucena from Masters in Trading. Today, I have another long-term analysis for you. What we're looking at today is the comparison or the relationship between treasury spreads or the yield curve versus the overall market, denoted as the SPX. In the chart that you see in front of you, SPX is the pink line. The other four lines that you see are different portions of the curve. For example, the one that you commonly hear discussed or talked about in the news or whatever is the 2s, 10s, the 2-year versus the 10-year treasury, which is the one that I am circling right now. Currently, it is at 0.44%. This is also referred to as 44 basis points. You can see that on this right axis, I'm circling it right now, and it corresponds to this particular line. So we know that this particular line that I just pointed towards is the 2s, 10s, the 2-year versus the 10-year treasury. Likewise, we have in darker brown the same 2-year treasury versus the 30-year treasury bond. That is currently yielding 1.1% and is the top dark brown line up here that where I'm showing. And on this price axis, we can see it as 1.1. Okay, there's two more shown, and those are the relationship between the 2-year and the 20-year. And then the relationship between the 2-year and the 7-year. These are just different portions or different snapshots of the treasury yield curve. You may be asking, what does the yield curve have anything to do with the overall marketplace? Well, it has a lot to do with the overall marketplace. If you look at the patterns that we have been able to observe going back into the past 1990, what we find is that the stock market really likes when these spreads are narrowing, when they're coming down. The market tends to like that, as you can see. The market, on the other hand, does not like very much when these yield spreads increase. Notice what happens to the market. It falls. So there's a clear delineation that we can see here. Mind you, this is a weekly chart, and I am looking at the max amount of data, so it's not going to be perfectly aligned. So what does this mean for us in today's scenario? I would like to point out one date in particular, and that happens to be this area right here, which coincides, if we trace it down, which coincides with, roughly this area right here in the yield spreads. Notice anything? I do. What I see is a market that has been on a rise since 2009 or so, as we can see. And at the same time, since 2009 or so, yield spreads and yields as well have been falling, okay? Just like we saw earlier here, yields falling, SPX up, and then again here, leading up to the 2008 crash. Yields falling, SPX happily going up, and we see it again. So what has happened afterwards? Well, we are seeing that yield spreads are starting to rise. Is that normally good or bad for the market? You tell me. I'll point to one example. We see yields rising here, and this is what happened to SPX. 2008, we see yields rising sharply. This is what happened to SPX. Somewhere around here, I'm not sure the exact date, but somewhere around here, late 2017, mid 2018, these spreads began turning upward. And obviously they don't always go up in a straight line. There's some chop to them. Just like on their way down, they don't go straight down. There's some chop to them. So if yields are rising and we've begun to see a period of very strange activity in the SPX, where the pattern of higher highs and lows is completely unlike the pattern that we were looking at prior. I think we could see that there's a clear distinction between the movement and SPX since this shift occurred to that of the movement of the SPX prior to that. So we're kind of at a crossroads right now. The market had a ginormous rally. Spreads are rising. Yeah, sure, the spreads are taking a dip right now. But unless these spreads continue falling and, go back down, and this is a fake rise, and then they really go back down, which I personally doubt that that's going to be the outcome. What I'm thinking we will see is something more like this, but perhaps more choppy, as we've been seeing. It goes up, it goes down, it goes up, it goes down. But over time, it's going up. And what do we know about the market when yield spreads are going up? It doesn't like it. Be careful. This is Pablo Lucena, Masters in Trading. Hope you have a wonderful day and hope that this has been informative. Thank you.